The following is a presentation of TFNN. It is now time for Trade What You See with your host, Larry Pesavento. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Larry Pesavento.
Looking good, Billy Ray. Feeling good, Lewis. Well, we're having a little bit of a volatility today because of the most important job reports ever. Wow, what a headline when you wake up to see something like that. How can 20 or 30,000 jobs with many people out there working have that much difference? But it's the same thing they used to pull with us with money supply. Back in the 70s and 80s, it was M1 and M2. Believe me, they did exactly the same thing. The only difference is there's a different circus under the tent. That's all it is. So this is what we're watching here. So we'll see what happens. We've got stocks down quite a bit so far. I posted to start out the show today, showing you the breadth of the market. And if you'll look at the far right side where you see the new lows versus new highs, all during this rally from the 24th that we've had, we've made more new lows than new highs. That's not a good sign, folks. And as you can see, the advanced decline line keeps deteriorating. This market is getting ready to really head south for the winter, and it's going to leave early because we don't have the fall doesn't start till the 21st. We've got a couple of things. First of all, I'm not going to be here next week. It's time for the old cowboy to take the horse in the corral and take off the saddle and wash it down. I've made 4 errors this week. And I thank God they were all in my favor. If they would have been against me, I would have quit at the beginning of the week. But they were in my favor. But I've really I've pushed it to the limit. So I'm going to take a week off. I'm still going to be doing my charts, but I won't be doing the radio show or interviews or anything like that. And the reason for that is it takes me a couple hours to prepare for the show, and I like to try to do as good a job as I can, and also the fact that we're coming into what I think is going to be the most critical week that we're going to see in a long time this next coming week. I don't know if you folks know this or not, but we have the Hebrew cycle of Rosh Hashanah Yom Kippur starts on September 13th going out to the 23rd. That's right out of the Hebrew Bible. It's a lunar cycle. It has some really profound effects on the stock market, and especially this year when they have that 7-year cycle called Shemitah, whatever they call it. And I don't know what it means or anything, but it's going to be, very, very interesting. When I was on the floor of the Merck, Barry Lind, who was Jewish, used to tell me that his father or grandfather used to say, you buy on Rosh Hashanah and you sell on Yom Kippur. And so I don't know if that means anything to it, but Twain and I ran that cycle through our Astro program many years ago, and it does work very well. And it's a lunar cycle, but you don't know whether it's going to be a high or a low. So watch the 13th for high or low, and then watch the 22nd or 23rd, especially the 22nd, because we have the equinox. The autumn equinox starts on the 21st. That's going to be our the shortest day of the year, I believe. Yeah, I think that's what it is. I don't remember exactly, but that's what's happening. One of my favorite baseball players was Sandy Koufax from the Dodgers, number 32, and Sandy was a very, very devout Jewish man, and he would not pitch in the World Series in 1965 because it was on Yom Kippur, and I've always respected him for that. And so anyway, let's get back to the markets. Okay, we know the markets are looking a little bit shaky today. What I would like to present to you here is, if you'll give me a second. Hold on, I want to double check something. There we go. That's what I wanted to see. Hold on just a second. Jumping around quite a bit. All right, now we want to go over to, I want to show you a chart that I think is very, very important. This is my opinion, of course, boys and girls. Okay, now this chart comes from one of our friends in Athens, and he has done some really good work here in the Hang Seng Index on the weekly basis. So what I'd like for you to see is that the Hang Seng actually closed down just very slightly here. Now tomorrow, they're closed now for the weekend, okay? And this market closed below the 61% retracement of the low that we made back in 2011, and we closed on that low. Folks, with that cycle coming in this weekend, if we close badly here in stocks, anything under 1922 in the S&P 500, I really think you should consider holding a position overnight in something, because we could see another gap down of immense proportions just because that cycle has come in and where it should have. Now, the other thing that's happened that we mentioned yesterday, and if you followed it very much, you would have been able to protect yourself a little bit, and that was in the New York. Let's try it again, Larry. This is in the New York Stock Exchange Index that we were following to see whether it was going to make the 786 retracement up there yesterday, and we didn't quite make it. We missed it by about 10 points. When it hit that point, the S&P was trading at 1978, I believe, is where it was trading. 75 or 78 is where it was trading when we got up near that 786 retracement in the New York Stock Exchange Index. So now what happens is, I have to show you two things here. We've got a little slight problem in Houston. Hold on just a second. There we go. I didn't get the camera to release on time. What I need to do is to bring this out twice to show you what the wow. Give me 1 second here to do this right. I got to slow down. Okay, now what we're going to do is we're going to look at the New York Stock Exchange possible price objective coming in at around 89.06. That's down a little more than 10% from where we are right now. In other words, we could see another move just like we had from August 19th to August 24th. We could see another move like that from this coming weekend, especially if we close badly today. Then we would be looking at something really, really sinister, on the downside. And I've got a technical problem, and I'll see what's going on. Just a minute, folks. I got to figure out something's wrong here. Give me 10 seconds or less or more. Let's try it again. Something's wrong with the camera. Gosh darn it, never fails. Well, I can't post any charts because when I click on the camera, oh shucks. Well, let's not worry about that. All right, let's move on to the next one here. We're having some really wild swings here this morning, which is what you like to see, because it gives you lots of chances to either go long or short, which is quite nice. And what we're watching now is, I'd like to show you what happened in the gold market this morning. And believe me, gold is looking less and less more attractive, folks. But last night this morning during this, oh dear God, hold on a second. All right, let's try it again. Something's not right, Al. My camera's not working. Doggone it. I don't know what the problem is. It doesn't. I'll have to figure it out during the break, but I can't get the camera to put the thing in. So anyway, we'll see what's going on. As you can see here in the gold market, we reached up to 1133. That was the 61% retracement of the high that we made yesterday. It was also the 50% retracement of the high that we made on September the 4th up at that 1148 level. So that tells us that we are still heading south. And I believe that 1133 number was right in the wheelhouse of one of the profiles that John Logan had this morning. So Gold does look like it wants to go lower, probably somewhere down around that 1190 level, which still is a longer term spot in the gold. And we've put that up here several times. We'll try to do it again here with a little luck. We'll see what's going on with this, and I move it over. For some reason, my camera just won't release. I do not know why. I don't know if the gold chart posted or not, but we'll see. But that's the one that I've been waiting for quite a while, is that 1090, not 1190, and we'll see what. All right, let me try it again. I don't know what the problem. Let me try something here. Start hot pointer. I don't understand what's wrong with this. I'll have to figure it out. Let me just let me try it this way. Nah, it's not working. Well, I'll have to get help from TFNN on the break, because I can't figure out what's wrong with my camera. It was working okay, and I don't know what's wrong with it now to get the things in, so we'll wait and see. But anyway, it looks like 1190 is where we're heading towards in the gold, somewhere between 1100 and 1105, 1190, somewhere in that ballpark if it's going to hold. Silver's holding up much better, but the rest of it, still looks like it's a little jumping around. So we'll wait and see, what happens with some of these things that we're watching here this morning. But overall, the market does have a bearish undertone. The breadth of the market is poor. The reaction to the market is poor, and that doesn't mean it can't change in a heartbeat. But that's what it looks like, from the beginning of looking at this thing, from this point of view. We will need one more chart that someone's asked me about, and if you'll give me a second, I will pull it up. And give me a second, and I'll see if I can get it here working. And that is the chart of the Dow Jones Utility Index. And I know you folks don't look at it, but it's a good harbinger of things that are going on in the market and in the world. And as you can see, we've already taken out the lows of August 24th. We've gone below the July lows, and all of those things are also really, really bearish. So you don't want to see what's I don't know what's wrong with this thing. Folks, all of my frustration in this business come from this darn computer. I don't know if the utility index chart posted or not. I cannot tell because my camera doesn't turn off and on. So, okay, I'm going to have a problem. Al, please call me at the break, please, and I'll see if I can get this camera fixed because something's wrong.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we've got a caller to rescue us. I hope you brought your lifeboat, Jim.
Larry, actually, we don't need charts on this because I really want to talk to you about, before the end of the day, what your P-index dates are and really stops on the E-minis. Mm-hmm. I made a mistake the other day. I was short from 1962 on the E-mini, and we're down to 1919, and I want to double down because it looks like we're really going to crack. And I put a buy instead of a sell, so I ended up covering my shorts at 1917, which turned out really well.
Very good for you.
Well, that was that's the lucky break. I made a mistake. And
well, I had 4 of them this week, so I know the feeling, my friend.
But the problem I see is, with these wild swings I don't know how much room to let these things run.
20 points is what you got to use now because the volatility is 4 times what it used to be, and we used to use 5-point stop, but now you've got to use a 20-point stop. Fortunately, the swings that we're having for profit are, just as wild. They're 20, 30, 40, 50 points sometimes. And that's the bottom line that I'm looking at.
Okay, because it's amazing. I mean, I was out of town and ended up just trading one lots and not being able to. That account has tripled, and so now that I'm playing with, I hate to say with the house's money, but now that we see the wave,
it's no longer their money, pal. It's yours.
Well, but I mean, the wave has obviously turned. Anybody that
sure
doesn't see that we've hit a top, whether it's the top or the major top.
Well, that's what we think. We have to wait till the close today, Jim, because, these markets have a tendency to, get a little bit over anxious. And sometimes if they close it really strong today, and who knows what could happen. If it closes really strong, it's going to look pretty good. If it closes bad, it's going to look really bad. The Hang Seng, anybody that could be long that over the weekend, I just don't. That's just very, very risky. Closing below the 618, and that's what we would be doing now if we close below 1922 in the S&P. Will be closing below the 618 of the previous move, and I believe 1914 was the 786. So if we close below 1914 in the S&P, I would expect another 50 points or so down minimum on Monday or Tuesday.
Well, that's because that was my question. I'm short from 1925. I probably would put the cover in at 28.29, and by the end of the day, make sure I'm short going into the weekend.
As long as you close badly today, I think it's okay to be short. This is what we talked about, you remember, on the 21st. And, we had the 24th was the big 1,100 point down move.
Right.
And so we have the same situation this weekend. And we have all these cycles that are coming, not just the there's just a whole lot of cycles from September the 13th all the way through, the 23rd. In fact, all the way through middle of October, there's just a whole bunch of them just banged up together, and that's where you think you could see something really, really crazy happen.
Well, and here's another observation in that the people that are just trading options are having a real hard time with these gap opens going up and down. You can be really ahead on a put option going into the close at 4 o'clock, and the next morning you just don't have a chance to lock it. You've gone from a really good profit to a really good loss. So the option traders are getting hurt.
They certainly are, and that's part of the fact that they're not open 24/7 like we are in the futures. So there's a big difference there, and that's the options writers. That's their edge that they have, is that
Right.
They know that most of them will never be executed, and so 90% of option buyers lose their money. And so if you learn to be an option seller, the problem is, as you well know, that you're an option seller until that option triples against you, and then you literally are in big trouble and you've got to get out of it. But that doesn't happen often. And I've got a friend that trades options quite a bit. He has 34 positions on. He has 31 positions in big profits and 3 positions in small losses doing options, selling premium.
Well, he probably did it earlier before the break too.
Oh, he's been different ones. He's an active trader, so he might not have those same positions on right now, but that's what he's looking at.
Hey, the last thing before the break is back in 2009, 2008. You said it would be the mother of all short covering rallies.
You remembered that? Wow, one person. Wow, terrific.
So what's your prognostication going forward now?
You don't want to know, cowboy.
I just listening to you, I know.
I'm looking at the man with the sickle.
Yeah. Well, I just want to be positioned.
Yeah. I think we got something. There's an outlier event coming. It's probably QE3 that's just going to blow up or whatever it's going to be. But there's an outlier event coming. That's why people have been dumping stock. Hey, thanks for calling in, Jim, and keep your lifeboat handy, buddy.
Hey, have a great week next week, Larry.
Okay, bye-bye.
Bye.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
TFNN has just announced a brand new morning lineup that is geared specifically for traders in this volatile traders market. Every morning at 8 a.m., John Logan starts things off with his daily program, The Global Market Pulse. At 9 a.m., Larry Pesavento trades the market during the market open Monday through Friday on Trade What You See. At 10 a.m., Tom O'Brien hosts the Money Masters for the hour, and Basil Chapman hosts his Tiger Technicians Hour at 11 a.m. From 8 a.m. till noon every market day, these traders are with you as they provide up-to-the-second market information so that you can make the most educated and profitable trades possible. The new TFNN morning lineup is happening right now. Tune in to see for yourself what kind of actionable trading discussion they have each morning, Monday through Friday, starting at 8 a.m., live only on Tiger TV at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay. Looking good, Billy Ray. Feeling good, Lewis. The technical problem is at my end, folks. The reason why I know that is that I took a chart off of my desktop and posted it as opposed to posting it out of Ensign. And that's the problem. So I don't know why it's happening, but I will have to just figure out, what's going to happen. Anyway, we'll just go on and show you some of these. The chart that did post in there was the Nikkei, and let's just walk through what we're looking at here, folks, because we've got a situation where we have the same situation where we were on August the 21st, and I cannot bring up the New York Stock Exchange thing anymore because Ensign will not allow me to, so I'm going to have to just talk, which is unfortunate for all of you, but that's the way. I can't do the Nikkei. I can try the Nikkei again. Yeah, that I can do. Okay, the Nikkei I can do. Just a second here. Get out of the way here. Here it is. Let's see if we can get it to come up, because it did work. Yeah, it works with that, but it does not work with instant. I don't understand what I've done differently, because I didn't do anything differently. Okay, let's not worry about that. Anyway, just keep an eye on this Nikkei, because you see how it closed on Friday. It is down just a little bit. It closed below the 61% retracement of the low from the 11th. It's a place where it could literally fall off a cliff on Monday. And that's why if we close badly today, we're going to be in the same scenario. We've got the Dow down, a couple hundred points this morning. So if the Dow is down, a couple hundred points on the close, then that's what you should probably do, is have a short position, coming into next week. We've got the 3-day weekend. We get that whole week, and then the following week is the week when all hell breaks loose. That's the September 13th through the 23rd. That's just a whole bunch of things happening around that time. And we start with the equinox on the, not start with that, but in the middle of it is the equinox on the 21st, the autumn equinox. And those are always pretty exciting. I believe we have an eclipse in there somewhere too coming up shortly. But we're going to have Norm Winsky on Tuesday, the 8th, to talk to us about some of the things that he's looking at. And he's done an exceptional job with his timing. And so I'll be interested to see what's really happening. Folks, I have a bedtime story to tell you. As you know, as you get older, you have a bucket list of things that you'd like to do in your life. With as you come into the 7th furlong of an 8 furlong race, there's certain things you want to do, and my list is rather small, because I've been able to do most of the stuff that I wanted to do all the time. But one of the things that I've two things. One would probably never happen, and that is I would like to see us make contact with someone from outer space. Really contact, so people can actually talk to the person or something. I don't think that'll happen. And the other one that I had on that list, which is there were some pretty bizarre ones, was to see if someone could really explain to me, why the market works the way that it does. And I actually, over the past many years here, I've been in contact with Bill Ehrman of Ehrmanometry, and Bill has made some of the most incredible calls I've ever seen in my 55 years of trading. And he showed me in about an hour yesterday over the phone why these highs and lows from the main points that we were looking at going back through September 3rd of 1929 through where we are now, how these highs and lows have come in at perfect relationships of the numbers of sacred science and numbers of sacred geometry. It's the most amazing thing that I have ever seen in my life. I realized that I've been looking at, I knew I was on the edge, because I love Fibonacci and stuff, but I had no idea on the timing stuff. He doesn't do anything with price objectives or anything like that, but as far as timing, he's incredible. I've never seen anything like it in all my years. He's never traded. He's 86 years old and relatively poor health, and a nice guy, but he knows more than anybody I've ever seen before. So I just want to bring that to your attention, because the dude really flat knows it, and he says the same type of pattern or template that's there is available for you in gold and soybeans or whatever you want, if you'll just apply it and do the actual counting. And the key to it is counting the days correctly, because we'll see which happens to that. Anyway, that's neither here nor there. Anyway, we'll move on to the next one. The gold looks like we're heading towards the 1105 to 1090 area. The fact that we could only rally to the 61% retracement of yesterday's range, it was a quick $13 rally and then back down again. The most amazing one is the surprise of the fact that the bonds have not reacted to this report, because it was a report that should have been, I would think, more favorable to the bonds, but they haven't, done that as yet. It's interesting because last night the DAX, right before the report, was trading right at the 61% retracement of the low we made just a couple of days ago. I don't know if that is held yet or not, but that's another reason to think that we have to wait until the close today to see what the market's going to do, because it's going to be a real interesting to see how it's going to hold up today. But it's the close today that is going to be the most important thing to watch. I had a nice chart that I was going to try to show you, but unfortunately I'm not able to do that, and that was also in the currencies. We've had a really big move the last 3 days in the Australian dollar going into the the very, very low, and we've just been notified. Fact is, that was one of the things I wanted to show you, is the silver just made a low at 1448. I believe the number on the 618 that I'm looking at came in at around 1435, so we're very, very close, to something there. So we'll see see how that transpires. So if nothing else, watch the close today, folks, because if we close really badly, the market has been technically doing what it's supposed to be doing. We had a big down move on Monday. It took us Tuesday, Wednesday, Thursday, to rally, a 3-day rally, and we gave most of that back in a matter of a very short period of time. And these commodities are still under tremendous pressure. We've got corn, wheat, and soybeans all still under pressure. The same thing in copper yesterday. I posted the chart in the room when it was trading at around 240, and we broke down more than a nickel in copper just in a matter of less than 24 hours. So these they are rallying a little bit, but they give it back very, very quickly, and that's not the type of thing that you would like to see happening. Same thing we have it in crude oil. We made that 786 retracement of the daily range yesterday up at that 48.36 level. The exact number was 48.02. We broke down a couple dollars a barrel to not quite, about $1.70 a barrel, and that looks like it's also getting ready to move lower. The gasoline and heating oil also rallied, but they didn't rally nearly as much as the crude oil did. So the crude oil is, of course, the dog that wags the tail. So that's the one that they break the products down. So that's the one that is the largest traded of any of those complexes. Okay, now we've got another 7 or 8 minutes. We have a question in here, but that I'm not able to post a chart, and that is the chart of Facebook. We were listening to John Logan this morning, and said that 1 billion people were on Facebook at some time yesterday. Boy, that's 25% of the planet, folks. I mean, that's a lot of people. So no wonder those guys have made $1 trillion or whatever it is with that type of potential advertising. I've never been involved with social networking. Someone is trying to get me involved in it, but I really want to put it off, because I just think there should be some privacy in your life, and with some of these things that they have out here, it just doesn't give you any privacy, and it leaves yourself open to a great deal of problems. One of the problems that Western Union has had over the past few years is that people have given out too much information on the internet, and people have turned that around and have basically ruined that company. So you just got to be careful nowadays, and there's so many scams out there that is just that are going on the internet. It's just truly amazing. The people that, if they would apply the same thing to a legitimate job, I think they would do incredibly well. So that's the bottom line of what we're looking at here. Another question from one of our listeners here at Tiger TV is, what do I think is going to happen to the bond market? And the bond market is telling us that it wants to go lower. that's, we've had lower highs. We've had all kinds of quantitative easing. Now, China is supposedly mostly out of their U.S. treasuries. Japan is still holding a great deal, as is Saudi Arabia or the Arab countries. And so the question is, who's going to fund this debt that we have to roll over? Because with quantitative easing, they've changed the game, is what they've really done, and that's not usually a very good thing, is what I would think. So we'll just watch to see what's going on, but we'll have to wait and see how the market ends today, because that's what's going to be the real key to the markets, as near as I can tell. That's pretty much it. I did want to remind you guys again that I won't be around all week. I might call in. I will be following the markets a little bit, but not much. And I might call in if something really dramatic happens or something like that, but I should be back on the 14th, God willing, and then we'll see. That week is going to be one rock and roll week. But we're in rock and roll city now, folks. We're having volatility like we haven't seen since 2008, and as you remember, in 2008 it continued for 11 months, and it will end sometime just like we did in March of 2009. It'll be one of the best buying opportunities we're probably going to come up with in a long time, and then we'll see what happens from that area. But I believe we're going to see something history making here in the next 45 days. I know that's wonderful timing but that's as good as I can come up with. It'll most probably be sometime in October, because October has a history of writing record books. 1929, 1987, all of those, still pop out. So we could have another one here in 2015, but we'll wait and see, what's really happening, and we'll go from there. And October 9th, we have a Bradley date that is also relatively important, and that's another good one that looks pretty interesting. The could take a while to break out the October. Someone said a question about the October 14th lows. That is already done. We made on August the 24th. I'd love to show this chart, because on August 24th, the New York Stock Exchange Index made a 1.27 expansion of the low from 2014. So it's already broken it. Everything's broken it with the exception of the Nasdaq. The Nasdaq made a 786 retracement at 3906 on that, but all the rest of these, the S&P has taken it out by a little bit, and the Dow Jones certainly has, and so has the New York Stock Exchange Index. So that's that's basically what we're watching. So I hope these things help, because I think you're going to see some really wild stuff in here, and it's technically doing what it's supposed to be doing. So you can hardly say that the market is manipulated, because it runs up to these numbers. Sometimes it goes a little bit higher, and see what the next thing is going to bring us. But the main thing here is to keep in mind that if we close really badly today, if we close badly, down more than 300 in the Dow, below 1914 in the S&P, we're going to take out 1830 very, very quickly, and you'll be able to see. That's an interesting point. Mr. Z in the room asked if I should have Bill Ehrman on the show. The problem is he is so number oriented that but he's so smart. He went to Harvard, very, very brilliant man. But you have to understand how he's trying to tell you things. If I could get him to bring it down, which I think I can, to a simple explanation, I think I'll try to do that. I will get him on in the next 2 or 3 weeks. That's a good idea. I appreciate Mr. Z reminding me on that. So we'll be right back and wind up the show in just a few moments.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, Trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
The Bull Bear Binary Option Hour, sponsored by Nadex. Up next on TFNN.
Okay, we're back, folks, and we've got a caller from Connecticut. Bob, are you there?
I am, Larry. Good to hear from you. Sorry about your issues today, but
Oh, no, it's normal technical stuff.
Well, we appreciate your years of wisdom. So, but I did want to ask you about the XLE and the crude oil and where you think things might be going in the next 2 weeks. If I could press you for that.
Sure. I believe that crude oil, yesterday we went up and made a 786 retracement at that 48 level. That was off the high we had made at 49. We rallied 10% off the bottom. I believe we're going to be heading down now in the complex for a little bit. It's just a question of whether we made a major low in oil or not. The jury's still out. We still have these other commodities that are under a great deal of pressure, and they could move over to the oil market without any trouble at all. But I do believe we'll be lower through the first several weeks of September. But you're talking to somebody that's short oil, so keep that in mind.
Well, that's very telling by itself. But well, I appreciate it, and I'm a subscriber and a big fan of yours. So thank you very much, Larry.
Well, I knew there was one out there. Thanks a lot, Bob. I appreciate the kind words.
Okay, bye-bye.
All right, I'll get that $20 to you as soon as I can, pal. All right, folks, let's end the show with this. If we close bad, be short. That's all I can say. Nothing else needs to be said. If we close bad, it's going to be bad. You can look at that New York, or that. Just go look at the Hang Seng Index chart, and it closed badly. I mean, it didn't even rally. When we rallied for 5 days, it was coming down. That's not a good sign. But closing below all those numbers, if we do the same thing, we're looking at, we're knocking on heaven's door, but heaven's going to be upside down. So you got to be careful and protect yourself. And any really bad close today, you want to, put the pedal to the metal and see what happens. The only risk you have is if the market gaps up really big, on Tuesday. Of course, it'll be trading Sunday night, but the chances are, the odds, chance favors the prepared mind. So the odds are that if we close badly, markets go lower. So we'll see. Live every day in an attitude of gratitude and do something kind for someone who has a lot less than you.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.